We are awaiting the reopening of Michael's shares, halted. We think we're going to get a restart here in a moment. But as we mentioned earlier, Apollo buying the company for $22 a share. Jim, they point out it was a premium of 47% before the speculation began a few days ago. But as David alluded to, it was a $1 low on March 18th of last year.
Well, it was one of the retailers that people felt couldn't make it. You go back and look at these. I mean, the one that I'm focused on right now is Kohl's. We know that there's an activist in there. David, Kohl's did better than a lot of other retailers. Let's put it that way. So, but that is a company that took down a lot of debt at a very high coupon, cut the dividend. They've instituted some of the dividend. A lot of the retailers are trying to recover. Michael's, I always felt, was a casualty of they never really had a great balance sheet, and they never really had a lot of customers. But something says to me that people feel retail got too cheap. Look at that stock. That's a rocket.
I mean, it's incredible at 22. There is a go shop here. Unclear whether there's going to be any other interest at that price. But to the point Carl and I've been making, of course, a year ago, this was a buck. There was a lot of question about its ability to maintain itself as a going entity. By the way, this was already a company that was private. Remember, taken private years ago, I think in 06 or so, by Blackstone and Bain. I think Blackstone just finished selling its final shares, maybe around $10, which, of course, they were probably very happy about as an exit point. But here we are at 22. But, you know, it's funny. You go back a year, Jim, and you've made this point unlimited on LB. Remember, their deal to sell part of the company to Sycamore fell apart.
Right.
And you take a look at some of these retailers from the bottom almost exactly a year ago, and what the perception was then and what the reality has been, it couldn't be more different.
And the retailers that are doing the worst, endlessly, are these essential retailers. And you see it. I happen to like Costco very much. Costco has been a completely challenged stock, even though, David, the company's doing quite well. Why? Because year over year, people just don't think that Costco can ever measure up, given the fact that it was crushing it during the pandemic. Michael's not so much. So, you know, people like what's bad and they don't like what's good. That's what's happening.
Shepard Smith here. Thanks for watching CNBC on YouTube.